Hey everyone, welcome back to RT Investing. My name is Rian and this is the 7th episode on the channel. Now, for those who don't know, I try to do this daily where I just chat about all things finance because that's what I'm passionate about, and I would really like to see everyone succeed financially in life because it's really not that difficult. So, thanks for tuning in. Thanks for watching. If you want to, tune in daily for my thoughts on, whatever is on the menu for that day, then please consider subscribing to the channel. That will help me out a lot. And so today I'm going to look at both of my eToro portfolios. So I've got the one RT Investing, which is my dollar cost averaging portfolio. Now I've made a few videos on that, so you can go and check in my on my channel's list. So, exactly on how you can, dollar cost average into the RT Investing portfolio. It's a long-term portfolio. It's a portfolio that is not meant or designed to be changed often. As I use my other portfolio, the McLovin portfolio, to dollar cost average into RT Invest, and I also use my wife's account, etc. There's a few people that are copying me, that's close to me, like people that I personally know, who all dollar cost average into the RT Investing portfolio. All right, so I'm going to be looking at them today. Let's get to it. I'm just going to move my face. All right, so this is the RT Investing portfolio. So you can see that since I've initially opened up these trades. So let's see. I think I've opened up most of these trades in June. I think I did all of them and on the same day. Yes, the 16th. So all of these I opened on the 16th of June. It is now at the end of November. And let's see how they did. All right, so VTI, VOO, both up almost 10%. You can see that the gold, the GDX, which is the Van Eck Vectors Gold Miners ETF. So this is basically all the big companies. You get another one, which is the junior one, which is the smaller cap companies. But this is, the large cap companies. But obviously, if the price of gold, goes down, then these companies' values as well. All right, then QQQ, which is our Nasdaq, that's up quite substantially in 6 months, five months. Then the Korean stock market took quite a beating. So I've made a video before where I showed how this loss of 15.3% would have been or how it is a lot smoother or a lot less down if you dollar cost averaged into this portfolio monthly with the minimum of $200, which is also eToro's minimum. It just makes it so much less detrimental if you dollar cost average, because you would have bought this EWY, you would have bought in at every step, every month where it went down, you would have bought in. So your average buy-in price would have been somewhere in the 80s probably, and not at 93 where I opened the trade at the first, or for the first time. All right, so that's, and then Europe's down almost 3%. The dividend ETFs up a little bit. We've got the green energy, solar energy, TAN, which is also quite substantially. We've got the S&P growth ETF from Vanguard, which is also up substantially. Emerging markets down. They've just been beaten down by the pandemic, quite badly. Real estate, VNQ, also up quite nicely, and then everything outside the US also, down quite badly. Bitcoin, obviously, since June, it's up 47% since June. Let's see. I opened it up at 39. Okay, we're now at 57. So it pulled back a little bit from the all-time high of 69. Then we have XLE, which is the energy sector, up a little bit. Oil up a little bit. I guess this is due to the excitement of possibly the economy opening up, more flights, etc. But now there's a new variant again, super variant. So we're gonna have to see what the effect of that will have. Then Ethereum since June up almost 80%. That is quite crazy. ADA now, or ADA, Cardano. Now, there's been some FUD around Cardano currently. So eToro actually announced that they will delist it for the US citizens. So the situation is still a little bit unclear. So apparently there's regulatory issues. So we're going to have to see what happens there. But for now, it's still part of this portfolio, and I'm going to keep it that way. I might, if it gets to it, I'm just going to check it out a little bit. I might change it. I might, close the trade depending on what the outcome is, if we know what the issue is, because I think that eToro might know something that we don't know or that the public doesn't know yet. And as soon as that comes out, and if it is an issue, then I might swap out ARA for something. But currently, it's a coin that definitely deserves to be, part of the portfolio. So we're gonna have to wait and see for that. And then we have also Solana. So Solana is also down a little bit. All right, so overall, let's look at the RT investing. So I've made a video, guys. If you want to know how this portfolio is broken down, you can go and look at that video, or you can just visit my page on eToro, and then also just come and have a look at the breakdown exactly of how this portfolio is constructed. And then also, like I said, this is a portfolio that is built for dollar cost averaging. And you can dollar cost average into all of these markets at the same time with as little as 200, which is also the minimum on eToro. All right, so the portfolio is up 7.7% for the year. You can see that I've started the portfolio in May and then opened most of the trades in June. And you can see that it's quite correlated to the market, as 40% is in pure US stocks. So it would kind of follow that trajectory. But if you invested purely into the S&P 500, you would have an average return of 7 to 10%, with dividends reinvested and adjusted for inflation. So my goal with this portfolio is to just beat the S&P 500, so to consistently just have better returns. So this is something that and also if you're going to put all of your money in the S&P 500, you open up yourself to a lot of risk. So in terms of having everything in the USA, I think even people from the USA would agree that you wouldn't want to just have all of your money invested in the USA. I mean, anything can happen. We live in very uncertain times, and you don't want all of your money just tied up into one place. But there's nothing like the US stock markets if it comes to returns. So that's why the largest portion of this portfolio is invested in the US stocks. But also, again, like I said, it's been hedged and it's been diversified to quite an extent, and it's for two reasons: not just as an hedge, but also to have exposure to other potential asset classes and other potential growth that we might see elsewhere in the world. Okay. We can see I still only have 7 copiers, and let's see, 22 trades. So there won't be. I have an average holding time of 5 months. Like I said, this is a long-term portfolio. I do not intend to make changes to it lightheartedly. This is designed to be dollar cost averaged into. So if we look at the portfolio breakdown, you can see that it's composed of 85% ETFs and then 15% crypto. It used to be 10, but it grew into more, as the crypto prices increased. And then let's look at the chart. If you started with 10,000, this is now the last year. This chart usually shows, this is the last 2 years. Let's see, 1 year ago. If you started investing last year this time with $10,000, then you would have had $10,683 by now. Now, obviously, this would be more realistic if we look at it at next year, June, when the portfolio is a year old. But for now, you would have been up, quite substantially. All right. Now, that's it for the RT Invest portfolio. So I'm going to log out and then just go to my other portfolio. All right, so this is the McLovin portfolio. Now, guys, this is my personal account. This is the account where I actually invest. This is where where I am on daily, and this is where I actively make changes, and I trade and I invest. But a large portion of this portfolio is invested into RT investing, and it's not only to back myself, but I truly believe in the breakdown that I have in RT investing, and I will be consistently dollar cost averaging into that. So that's a big portion. We're going to see the percentages now, but that's a big portion of my investment. And then the other portion, or the rest of the money, like I don't play with, but I take calculated risks, and I like to explore these things. You always have to have exposure, or try out new things, but obviously always do your research and know what you're getting into, understand what you're getting into before you ever open up a trade. All right, so let's look at it. So let's go to the portfolio. All right, so you can see that I have the VOO, the growth. So this is all of the growth stocks in the Vanguard, all the growth stocks in the S&P. And you can see that that's up 7%. The VUG is up 16%. Now I have to say I did not open all of these at the same time, so you can see that these are a little bit newer trades. The VOG, you can see there's September, October, so it's more recent. And then the VUG, you see there's some of them are from January, some of them are from September, June. So this one is a little bit, I've been in the market longer. You can see that I have an open price of 251, and then the average open price is 275, current price 321. So you can see that it's not the same time. All right, then RT investing, you can see that I have $2,500 invested into RT investing as well. And now if I just go to that same example, you can see, look at this, my drawdown on the EWY is a lot less. It's 7% and not 15%, because I have dollar cost averaged into RT Invest so many times, 1, 2, 3, 4, 5 times, and you can see that my average buy-in price is somewhere in the 80s, probably low 80s, and not 93 where I opened it up on RT Investing. So this just shows you the power of dollar cost averaging. So even this, look at the GDX. So this was something with a massive drawdown on the peer RT investing portfolio, but on the McLovin one, you can see that I just kept on buying in, and then some of these are already in profit now, so I will be overall I will be in profit a lot sooner than the real RT Invest portfolio would be. All right, so that's it for RT investing. Then I have ARK now. ARK has been hit quite substantially. The tech stocks are just taking a hammering right now, or the innovation stocks. Let's just go and look. So you can actually go and look at ETF.com, and we can actually go and just check. I just want to see, I know Tesla is a big factor here. I just want to see why RK is taking a beating. This thing was literally green a few days ago. So let's just look at RK, innovation ETF. So this is a good, a very awesome site for you to go and just do your research on different ETFs, etc. So I'm not going to read through all of this now. I'm just going to scroll down, and then here just show you the breakdown. So one of the biggest exposures, Tesla, Unity Software, Zoom. I know Zoom has taken a beating. I have Zoom open as well. I have Zoom stock in the portfolio. Yeah, look at that, 30%. The Zoom has taken a beating. Shopify, Square, Coinbase. Okay, so it's all innovation. Let's quickly have a look at Shopify. So if we look at Shopify, I see it's up yesterday. Oh, didn't take that much of a beating. Maybe Unity, but yeah. So some of the big stocks have taken a beating. It's probably this. Yeah, see, it's turning around now slowly. Let's look at the ETF itself. If it's also, turning around, maybe it was just a pullback. Yeah, see, ARK has been going sideways here for a long time. You get these ups. We haven't seen the highs that we've seen in February of this year. It's just been trading sideways all along. So this has been so I'm a big fan of Kathy Wood, and I agree with most of her views. of where we are going in terms of investing in companies that will make a difference in the future. And I'm a very strong believer of the green energy sector, of the autonomous vehicle sector. What else? The future payments in terms of the whole crypto boom. I think those are three key industries that's going to be massive in the future. And I am backing those industries in my portfolios. Even with RT Invest, I have exposure to TAN, the green energy, the autonomous vehicles, RQ. But in my personal account, I have a little bit more exposure. I've got exposure to the fintech innovation ETF on ARK. I have exposure to the ARKW, which is the next generation internet product. So, point is, I have a big stake in ARK Invest. I mean, this is what 6K invested in RK. Let's just see percentage wise. But if we do this, I might be able to see here. So 5.6. So what is it? 6, 12, 18, 24, maybe a little bit less. So 20+% of my portfolio is invested into ARK Invest. So yeah, I honestly, it's just, what's the thing? The thing is with a lot of risk, for potential reward, you have to take risk. There's always that balance. With risk comes reward, but also with a lot of risk, there's a potential downside as well, strong downside lots of times. So, it's something that you have to find out for yourself and find that balance. How much risk are you willing to take? No, I personally, I'm a little bit of a risk taker. I take calculated risks, but yeah, so that it is what it is. All right, let's not waste any time. I'm going to go down. You can see ADA here, substantially down 17%. Bitcoin, Ethereum, everything pulling back a little bit. Solana. Now, I might add some of the metaverse crypto coins. I've made a video on that, my picks. So I might add Mana Coin and the other ones in that video. So I might add them to this portfolio as well. Maybe just to get a little bit of exposure there. So that might be coming soon. So maybe in the December update, the portfolio would look a little bit different in terms of crypto. And then also I'm invested in, so this is ARK's version of the autonomous. This is eToro's version. Now this is awesome. This is the driverless copy portfolio. So if you look at the stocks that they are buying into, they're buying into NVIDIA, Tesla, General Motors, Apple, Google, Intel, BMW, Uber, TomTom, like all of these companies, that they have exposure into. So this is awesome. This is kind of like an actively managed ETF. It's not, it's very similar. Yeah. It's just I don't think you pay any fees for it. Obviously, you just pay the spread fees on the actual stocks that are in, that they are investing in for you. But I don't think there's like a management fee like you would have on the ARK ETFs. And that's another drawdown on the ARK ETF. They are very expensive in terms of expense ratio, because they are actively managed, most of them. All right, if not all, I'm not 100% sure. All right, then we have the renewable energy, Tesla, not Tesla, eToro. So eToro, they are investing in companies, First Solar. You can see Enphase here. There's a few big names that they invest into, Cisco. Yeah, so this is quite cool. So this is, again, I back this sector as a whole, not any specific company, not anything. It's a little bit less risky for me to back an industry as a whole, to buy into ETFs, and to do. I'm not a person that would buy into individual stocks easily, so it's for me, it's a little bit risky. I like to invest into ETFs. I like to have it a little bit more, just risk friendly. If any one company, if I get it wrong on one company, it's not going to be, it can be quite detrimental. But if you get it wrong on a whole, like if that one company, fails, it's not going to have that big effect on your ETF. So that's just me. I like to, keep it simple. All right, then I have, Boeing. Now this is something that I want to keep on buying into. It's just been hit so hard by the pandemic. They just haven't been able to get back. Then also Disney. This is one of my metaverse picks. I want to, just up my stake a little bit in Disney. I also want to add Snapchat. I want to add Unity software. There's a few stocks that I want to add in terms of metaverse. Just the whole metaverse revolution coming. Yes, so I'm not going to talk through all of these stocks. I have started to shape my portfolio to accommodate the metaverse. That's why you would see, there's stocks like Facebook, which is now Meta. I also have some Axie Infinity in here. So I want to kind of just add that whole metaverse section to the portfolio, and I'm going to be doing that in December. I'm going to shuffle a little bit around, and I'm going to have probably 10% exposure, I would say, to the whole metaverse revolution and everything that's coming, with that. As the metaverse is kind of like the internet 2.0, so it's definitely something that we should be paying attention to. All right, to wrap this up, let's quickly look at the performance of the portfolio. So I'm going to click on McLovin, and let's click on my stats. So you can see that this year has been, fairly well, not as good as last year. Last year was up 46%. This year so far, up 33%, almost 34%. Hopefully, if we have a crypto bull run, the Santa rally, then it might push it up over 40. That would be nice, but yes, it's not bad for the year. I'm still trying to maintain the risk. This just shows me that I'm not taking unnecessarily bad risk. And then, like I said, I trade often here. I've quite a lot of trades, but I've been on eToro since 2017, so it doesn't surprise me that there are as many. You've seen the portfolio. Let's just see what the breakdown looks like. So 18% invested in crypto, stocks 20%, 21%, and then ETFs 60%. So this is kind of like a true reflection of my risk appetite. Like, this is about as risky as I go with my single stocks and crypto. And then, the ETFs is just where I feel a lot safer, and I can also, invest, rather invest in an industry or a country or, just a broader sector than, something like a single stock. But I do enjoy both. Let's look at the chart. If you invested a year ago, wow. If you invested on the first, this is 2 years. Well, you look at this, you would have doubled your money. If you copied the McLovin portfolio, you would have doubled your money in 2 years. If you copied me with $10,000, no, wait. This is a year. This doesn't make sense. No, this chart is not right. Here is the first. Here. So let's just see, it's showing last year, but it's not correct. 1 year ago. All right, there you go. If you copied me with $10,000 a year ago today, you would have had $16,000 today. So that's a 60%. Not a 60. What is that? Yeah. Well, I can't do the math now, but I can, but I can't get my calculator now. It's full screen. But let's see. Last 2 years, you would have doubled. No, you see, this is more correct. I don't know where that other graph came from, but if you invested with me. If you invested $10,000, this is from 2019. Then you would have had 18. All right, point is the trend is upwards. That's what we want to see. We don't want to see a downward trend. So, it seems like I'm doing something right. So, but so guys, just as a final note, remember consistency is key. With anything in life, consistency is key. If you want to see your finances grow, then the key is to consistently invest into the markets. And that's why I created the RT Invest portfolio for myself, just to make it easy to just consistently invest into all of those markets at the same time. Just getting the best buy-in price consistently. So that's just the gist of it. Just consistency. Anyways, thanks a lot. I hope this video is not too long. Thanks a lot for watching. For the people that watched up to this point, if you like this video, please consider subscribing. If you want to see, just any of my future thoughts, my future, videos coming out. And I really appreciate you guys supporting me. And I hope to see you soon. Talk soon. All right. Thank you.